Well, greetings everybody. Welcome to our session for optimizing your EA software. My apologies for anybody that was tuning into the live presentation. We had somebody that was decided to be cute and interrupt and assume control and was messing up my spreadsheet, was moving my pointer around, was changing the slides. And so, typically, as I say, that happens when we have cowards who are jealous of our growth and our business and what we're doing, and they have to come in and try and create some sort of disruption to appease their small minds. So, again, my apologies. We'll try and figure out how to prevent that from happening again. But I wanted to get this presentation to you as quickly as I could because I just truly appreciated your commitment. Some of you were waking up and staying up, and I feel bad for you. My apologies again for that. And so hopefully you'll get value out of this presentation in a recorded form, even though you were there to attend live. So again, we're going to talk about optimizing your EA software, an A to Z perspective on the ultimate reality of managing income and loss utilizing EA trading software from the experience of a seasoned trader. So as we do talk about financial markets and money associated with those financial markets, we do have to have appropriate disclaimers required by our federal oversight authorities. And I've got two separate ones here that whatever part of them is applicable to the presentation, but I want to present them both. One, if we talk about live trading, which we're not going to show any live trade results today. We have a results group for that. If you're not familiar with the results group, get back to your upline or get back to the person that sponsored you or get out back to your upline ranking affiliate and ask them for information about ATM and our results group. So I'm not going to bother talking about the testimonial disclaimer today, but I do put it there in the event you would like to pause this presentation and read it, so you can be comfortable if and when we do talk about live trades in other presentations or at our group sites. You should see that on any trade results posted. And if you don't, let myself or Amy know about it, please. Demo trades, we will talk not so much about demo trades, but spreadsheets today. And spreadsheets represent hypothetical data. Most of the disclaimers talk about hypothetical data from demo trading in regards to looking back at demo trading, but spreadsheets obviously can do forward looks as well. And because a forward look in a spreadsheet is indeed hypothetical, we should cover the hypothetical results disclaimer. And that essentially says hypothetical performance results have many inherent limitations, some of which are described below. No representation is being made that an account will or is likely to achieve profits or losses similar to those shown. In fact, there are frequently sharp differences between hypothetical performance results and the actual results subsequently achieved by any particular trading program. One of the limitations of hypothetical trading performance results is that they are generally prepared with the benefit of hindsight. In addition, hypothetical trading does not involve financial risk, and no hypothetical trading record can completely account for the impact of financial risk in actual trading. For example, the ability to withstand losses or to adhere to a particular trading program in spite of trading losses are material points in which can adversely affect actual trading results. Talking about a couple of things there, you could run out of margin to buy additional trades. That doesn't happen necessarily in demo accounts the way it actually does in live accounts. And more so importantly, the head game, the mental game, the psychological game. If somebody sustains losses, for them to recover and get right back and trade for victory is very challenging, and most of the time it doesn't happen. So very true point there regarding hypothetical results. There are numerous other factors related to the markets in general or the implementation of any specific trading program which cannot be fully accounted for in the preparation of hypothetical performance results, and all of which can adversely affect actual trading results. Past performance is not necessarily indicative of future results. Nobody could predict the future. Most people's results will vary from anything shown in any hypothetical data. And trading Forex is risky. Your results will vary. Only trade with money you can afford to lose. This is not a solicitation to invest. We are not an investment company. Amy and I are not investment advisors. We don't give financial advice. If you have any questions there, you should seek a professional. We'll talk about that later in my personal disclaimer. So hopefully everybody's clear. This is standard. I know a lot of people find it boring, but it's very important that you do understand the risks associated with any income opportunity. And in fact, most traders do lose money. And this is why education is very important. Financial literacy is very important on top of whatever specific strategy you may actually be trading. In terms of myself, my name is Steve Gregor. I've been trading for 16 years, almost 17, coaching for 16. And, I am part of economy. I am the economy director of education, but I'm not in that capacity here today. I'm here as Amy's co-partner with a collaborated joint team doing a presentation on EAs. And so, this is not an official economy presentation. Nothing presented herein is approved or endorsed by economy. This presentation is a production of an independent affiliate. 100% of everything presented herein is my opinion. I share my history and trading experience in trading, and that will be my understanding of trading as applied to EAs as well. And that includes the good, the bad, and the ugly. I offer you insight so you, the customer, can make educated decisions regarding trading. I am not a licensed or professional trader. I do not provide investment, trading, or financial advice. And if you have any questions regarding trading or financial matters, seek the advice of a financial professional. And don't just take people's word for it. Okay? So that's enough about me. Let's get to the meat of what we're talking about today. First of all, today, I told you this was going to be a game changer, and that's going to come about how you have to see things. And I'm going to ask you to suspend, block, and forget all that you've already been taught about Traide Ringer. Not to erase it, but just for the purposes of this presentation, have an open mind and suppress that. So if any of that starts surfacing while I'm talking, you just suppress it back down. Focus on what it is I'm saying. Listen to it in its entirety. So the important stuff, the stuff that's going to make a make or break difference in your experience with Traide Ringer as a consistent income producer, has not fully been presented to you yet. Okay? It just hasn't. I've been on Zooms, I've been on broadcasts, I've been in groups, I've been in chats, I've been in channels, and everything I've seen is valid and good. It's just not the whole story. So tonight in part 1 and next week in part 2, I'm going to share with you those missing pieces, okay? Some of this information you already know. Okay, I know this because some of you have been exposed to stuff I've already done. But you have chosen to ignore it, or worse, just skip it. Now, I'm a pretty humble guy. I don't have a big ego. I haven't, hung the ego up a long time ago as I was learning to trade. But there is one place I have my name attached for legacy purposes, and I do hope it gets remembered in that sense. And that is Gregor's Law. And Gregor's Law is a simple law. It has to do with multiple steps. And so if there is a set of sequential steps that must be accomplished in order to achieve an objective, if you elect to skip the steps for whatever reason, I don't like C, I don't like number 4, whatever, comfort zone, or just don't want to be late, you want to be lazy and you don't want to do it, whatever the case may be. But if there's 5 steps, 1, 2, 3, 4, 5, and you skip any of them, the reason there were 5 steps and not 3 and not 4 is because you need all 5 steps. And if you skip any of them, you're going to destroy your chances of success. That's Gregor's Law. Gregor's Law says you can't multiple choice your answers and your actions. You have to do them all. When somebody takes the time to outline what it takes, you have to do them all. Unless they say, oh, pick any 5 out of 10. That's a different story. But if I'm sitting here saying step 1, step 2, step 3, step 4, or these are the 27 steps you need to do, you need to print that out and check them off. Otherwise, you're not going to make it. You cannot use your own selectivity. All right? And the reason you choose to skip it, ignore it, is because you have been chasing money with Traide Ringer versus building wealth using Traide Ringer. I'm going to say that one more time. You already know a lot of the stuff I'm going to tell you, or some of the stuff, but you've chosen to ignore it, or worse, just skip it, because you have chosen to chase money with Traide Ringer versus building wealth using Traide Ringer. All right, so we're going to start off tonight getting into understanding risk. And we have a diagram here of understanding trading risk in manual trading. And there's 2 different representations here in the same graph. And note the bottom right-hand corner, this is not drawn to scale, okay? And so we have what I call the existing trading paradigm. This is where 99.999% of the traders are taught. My traders and myself call this the old paradigm, but it's the existing paradigm. It's the paradigm that 95% of traders lose in. And then we have the new paradigm. This is stuff I do, my technologies, other technologies. This would include Trade Compass, okay, is a new paradigm system. So let's talk about the differences between the two, but the thing that's common between them as well. So what you see here is an up green arrow and a down red arrow. They represent, a positive money, negative money. They represent a positive return on your account and a negative or a loss on your account. And as you can see, there's a 0% line and a 2% line. So most traders in the trading world, especially beginners and intermediates, are taught to trade with no more than 2% risk in a given trade. No more than 2% in a given trade. And so in the old paradigm, the existing paradigm, for the most part, you're taught to go after a 2-to-1 reward to risk ratio, or some systems, some educators will teach you a 3-to-1 reward to risk system, which means that for every trade that you have a given risk, in this case 2%, the trade analysis, the trade criteria should show at least an open path to a 4% gain based on pips, etc. Okay? So that's the way the existing paradigm works, 2-to-1, 3-to-1 in terms of risk reward. And you can see, even though it's not drawn to scale, and I did a terrible job at scaling, but you can see that above the 0% line, there's much more to be made than there is to lose in a given trade. Now, the new paradigm, because of the way it works and the technologies that we use, have a very high, when you win, has a very high dollar per pip ratio. And typically, for the same trade with the same size account, same downside risk, everything else being the same, the new paradigm trader is going to make anywhere between 3, 5, 10 times the profit that the old paradigm trader will make. Now, we're not talking about the kind of profit or the percentage gains on account. We have to assume the old paradigm trader is going to win. And all I'm saying is if they win and we enter the same trade and we win, our profit's going to be 3, 5, 10 times the amount they make. And at the same time, just have the same downside risk in the trade, that being 2% of our account. So that's what old paradigm or existing paradigm trading looks like. And the bottom line there is there's much more to gain than there is to lose in your typical trades, which would allow you to have a win percentage, even at 50%, would yield a growth curve that was positive because you are winning so much more per trade than you'd be losing even at 50%. So let's get to Traide Ringer, and let's talk about some of the common settings that are distributed and some of the terminology associated with them. So we have Traide Ringer conservative and Traide Ringer aggressive. And a couple of interesting asterisk points on this, but let's look at the conservative trader first. And the percentages here now are essentially the stops or the equity stops for the compilation of trades that you have going on at any given time, whether it's a positive float or negative float and whatever you have in your account. But if you have an equity protector set at 35%, what it means is if your account draws down and the sum total of your account plus the positive and negative float added together is 35%, Traide Ringer will shut your account down and stop your trading. That's what, if you have the trading set to stop when you hit the equity protector. That's what 35% means. It also means you can go to bed at night and wake up and see 35% of your account missing and gone, assuming market conditions allowed a drawdown and a combined float, positive and negative, to give you a total of a 35% reduction in that week's total balance. The Traide Ringer software would shut it down and you'd be finished trading. So, however, in that look, we also see most people. Now, again, these are not recommended settings. These are just settings that we see by numbers of people using them. Some people use tighter equity protectors than 35%. Some use 40, 50, 60. I'm just doing an aggregate conceptual example there, where somebody has their equity protector set at 35%, and they're looking for in that range of say 3 to 5. So I kind of stuck the top of that oval, if you will, in kind of in between 3 and 5%. But let's just go ahead and say 5%. What that means then, compared to the manual trader that was looking for twice the gains per risk, here you're looking for 1/7 the gains. So again, I know it's not the scale, but if you look at the representative numbers, you realize that you're going after a 5% gain, but you're risking 35%. So it's a 1 in 7 reward to risk, or if you want to look at risk first, it's a 7-to-1 risk reward, which in the manual trading world just doesn't exist. Okay, well, it does in certain newbie situations or situations where people are trying to sell something and don't understand trading. The other thing is with the aggressive trader. And the aggressive trader is going for more. They're going for 7, 10, and even higher percent gains in a given week. And in order to get that, they're doing some other things with their settings. We're not going to talk about all the settings today. We're just talking about risk in general. They have to open up their stop loss, and many times they run it at 100%. And that's to accommodate larger drawdowns. Now, we know Traide Ringer is a counter-trend system. It typically doesn't have any problem getting 15, 20, even 25% drawdown before a particular swing will turn around, and then your most recent, which is the most heavily weighted trade, will go the farthest, and then the second recent and the second most heavily weighted trade will go the next farthest, etc. And so typically with Traide Ringer, you'll see the biggest gains come after the steepest drawdowns. Not always. Sometimes that drawdown will continue. But to accommodate these drawdowns that seem to have variable rates, they could be 20%, they might be 25%, sometimes maybe it's 42% in a deep week. But nonetheless, to accommodate all the variable potential drawdowns, the Traide Ringer equity protector of 100% will allow those drawdowns to occur, and then the software to turn around, or the price market price to turn around, and Traide Ringer to close those out in profit as the reversal takes, and do what else it does with cost averaging and hedging, etc. So again, you can look at this, and again, it's out of scale, but what I want you to look at is the number above the zero line of a 10% gain, hopefully for the week, but in doing so, risking 100% of your account. Now, there are some conservative traders who use 100% EP, and they're calling them conservative trading, because they're using 0.01 per thousand for lots, and they're using a range of 25, and they have nominal multipliers for their range in version 4 of the software, and so they see everything they're doing is conservative, accepting the fact that their equity protector is down at 100%. And again, they're doing that because they've been taught, if you want to make profit, you also have to incur these drawdowns, which are typically beyond, can go easily beyond 20 and 25%. So a lot of people are putting their equity protector at 100%. Just understand one thing on that. While it may be necessary to survive a steep drawdown in a given week, and a lot of that drawdown as a percentage in actual raw dollars is a function of your actual capitalization as well as risk and the other variables we discussed. But with 100% EP, what you are saying is, I'm prepared to go to bed at night and wake up and see I have $0 in my account, or something real close to that. That's what 100% EP is. So you have to see the downside of it. It's not just the upside. So if we look at this now and compare manual trading with Traide Ringer, EA-based software, and we look at the two reward to risk zones and what's going on in manual trading, we see even in the old paradigm, you have a 2-to-1 or 3-to-1 at 4% gain to 2% risk. In the new paradigm, 20% gain for 2% risk, a 10-to-1 reward to risk ratio. That is all inverted with Traide Ringer. If you're going for 5% and you even have a 35% equity protector, and I know a lot of people got stopped out this week at 35%. If you have a 5% gain as a weekly target and your equity protector set 35%, you are risking 7 times your account in a loss than you are hopefully for your gain. So you invert the reward to risk ratios in the EA by the way it operates. Okay, and obviously if you're running a 100% EP and still going for 5%, now you're running 20-to-1 risk to reward. You're willing to take 20 times the loss than you are the gain. So you have to look in the mirror and reflect on that and say, am I really prepared to do that with my money? All right. I'm not saying you should or shouldn't. I'm just saying you need to ask yourself that. So it could be 20 to 1, typically 10 to 1, with that heavy stop loss or equity stop at 100%. So a lot of you have seen these kinds of graphs before, but many of you haven't. So I want to bring one up and show you. This is a recovery math. And what it shows you on the left is the loss that you incur on the right after you've incurred that loss on the now new balance, new lower balance, what kind of return you have to have on that to get back to where you were, to get back to a break-even point. And you can see, oh, gee, if I lose 5% of my account, I have a 5.2% requirement to get it back to break-even. Let's drop down to 20%. If I have a 20% loss in my account, I have to make 25% to earn it back. If I have a 35% account loss, I have to get 54% back in order to get back to where I was. And if I have a 50% drawdown or a 50% loss, I know some people do operate their EP at 50%, and you actually incur that loss because the equity protector got triggered, you now need a 100% gain on your account in order to get back to break even. And if you're doing that in terms of 5% a week, that's 20 weeks, that's half a year. I know you think there's 26 weeks in a half year, but there's not. We'll talk about that later. So one loss at 50%, and it might take you half a year to gain it back just to get back where you started. This is why you have to think about these losses. And later on, when we talk about a strategic plan, before you start trading, you can think twice about these recovery zones. So right now, as somebody who's been in the business for years, who've known people for a decade or longer, who've traded bots and expert advisors, from what I see in presentations, what I see in groups, what I see in discussions in those groups, chats, and channels, I've concluded there's about 5 types of Traide Ringer users. Those seeking the Holy Grail, they're out with, they're using next month's rent payment, even with the risks that I just showed you inherent in Traide Ringer, and they're hoping to double down on that, okay? And again, unrealistic expectations, a small account probably, and they're looking for the lottery ticket win. It's not the way to view Traide Ringer. Somebody that's seeking a hands-off, automated, passive income stream. Now, in terms of our marketing as affiliates, even as users, our corporate office has done a really good job at educating us not to use those kinds of words in marketing. We cannot say it's hands-off. We cannot say it's automated. We cannot say it's passive income. The reality is, Traide Ringer is a beast. It is brilliant. It's genius. And with the settings we have now, we're starting to lean towards those kinds of realities, but it's nowhere near 100% hands-off. It's nowhere near fully automated. And because you do have involvement, it can't be considered passive income. So we can't market it that way. That doesn't mean people don't come to us looking for it to be that. And therefore, that can be a type or kind of Traide Ringer user. Okay, traders, and I say really. So a lot of people say, oh yeah, I've been trading for 3 years now. And what that really means is they were in some other education company, and they went through their other education company academy, and they went through their company master educators and some live coaching sessions, and they tried a system here, they tried a system there, they tried a signal here, a signal there. They haven't really achieved consistency in their trading yet, but they call themselves traders. The reality is their label is more appropriately, I am an aspiring trader. I am in the midst of learning to trade. It's their ego when they talk to other people that makes them say, I am a trader. So for wannabe traders, and there's nothing wrong with being a wannabe trader, it takes several years usually to become a decent manual trader. But manual traders who want to trade with Traide Ringer. Now here's the problem with that. We do have some traders who are seasoned traders that trade with Traide Ringer. They have extra capital. They know what they're doing. They know the risks they're taking, and they can stomach the losses and sometimes combine losses, not just in their own manual trading, but that with which Traide Ringer is going to do. I don't recommend manually trading with or against Traide Ringer unless you're an existing seasoned trader, meaning you can consistently earn money. All right, it's not what Traide Ringer was designed to do. Traide Ringer is a compounder. It's a long-term play, and as such, it's designed to be a secondary source of income. And while we can't say hands-off, automated, or passive, we can say, gee, I don't spend more than about 5 minutes a week on my AI software. Turning it on, make sure, cleaning the VPS up, making sure Windows updates are done and it's clean, shutting down and reinstalling or reopening my MT4 workstation, making sure Traide Ringer is attached and ready to run for Sunday night, 2 hours after market open. And then daily checking it, and if I need to make adjustments to the settings, either in a more aggressive stance or as a defensive countermeasure for some market conditions, I can do that. But to total it at 35 minutes a week for a 5 to 7 day week, that would be a lot of time for the average decent user of Traide Ringer. So it doesn't require a lot of time, and therefore it can be a secondary income stream. And I would recommend to those who are aspiring to trade, instead of using Traide Ringer as some supposed crutch, I would just let Traide Ringer do its thing, learn how to approach it, how to position it, how to frame it, learn the settings. Once you get past that learning curve, now you're spending the 5 minutes a day at most, a half hour a week, whatever. Go back to your manual trading and go try and learn a system. Let them represent two separate income streams instead of combining it all into one. It's very dangerous, not just on accounts, it's very dangerous to your mental head game, okay? Then we have traders who jump in live before they know what they're doing. That's pretty simple, and that represents probably, in my opinion, about 90% or more of our audience. It's just anecdotal based on what I see, but that's probably 90% of our community, okay? You jump in live before you fully know what you're doing. And then there's those that understand Traide Ringer, they know what it is, they have it framed right, and they're moving forward. And what I want to do today is kind of talk about some things to transition you out of those first 4 slots and move you into the last one, to actually understand what Traide Ringer really is and how it's positioned. Now, I've already covered the ways in which it differs from trading. And because of that, I'm going to tell you that I don't consider Traide Ringer a trading product. Wow. Okay. So we'll see how I defend that here shortly. But let's look at a few things here. This is, for the most part, what I see people thinking they've been taught. Hey, I'm a trader. I got my license. I bought Seed and Compass. I've got access to Traide Ringer. And there I am. All I'm told is if I can just master the settings. Don't trade until you understand the settings. So that makes it sound like if I understand the settings, I'm okay to trade. Demo trade until you understand the settings. Demo trade until you understand the software. See, it's always about the settings and understanding them. And so you sit there and you position this in your head subconsciously as you go to sleep at night, and it works and it reinforces it. And it says trader plus understanding of trade settings equals money. And I should put positive gain there. Trader plus trade settings equals money. And, when you take that orientation, when you frame it right that way, what you end up happening then is these inconsistent weeks. So when you use that strategy or that framing, and you're blue at the end of the week, you're happy. And if at the end of the week you're red, you're upset and sad. And so you're going to cycle between that. And it's not necessarily a 1 week win, 1 week lose, 1 week win. It'll be very random and on an alternating basis. And so you go through these roller coaster cycles of emotion, roller coaster realities in your trading account, and it doesn't leave you with the most comfortable reality. These are those first 4 slots that we talked about. It's not the 5th slot where you understand the software. So my contention is this. This is an incorrect understanding. And I understand today most of the leadership, most of the people I've seen talking about Traide Ringer, doing the Zooms, doing the sessions, doing the support, most everybody teaches you this. All you have to do is master the settings and you're good to go. All right? And I'm going to say that's not right. I'm going to say there's something in the middle that's missing. And the reality is that approach is going to have you alternatively between blue and red weeks, happy and sad weeks. And the reason that approach yields those inconsistent results is that you've been taught to frame Traide Ringer as trading, and therefore the settings will control the results of that trading. That's only partially true. The settings represent a small component of what it takes to be successful with Traide Ringer. So that's my cue. I need to bring a spreadsheet over because I do want to talk about your understanding of what Traide Ringer really is in terms of a long-term compounder. It's not a holy grail lottery ticket. Make all your money this week using Traide Ringer. Maximize your aggressiveness in order to do that. It's designed as a long-term compounder. So I put together a little spreadsheet. Now, before I talk much about this spreadsheet, I'm going to take it back off because I don't want you looking at it while I talk. And as such, I need to go back here to the previous slide. So something about this, and I'll just be kind of blunt here. The company, in its wisdom, and a lot of this comes from Sal Leto, Vice President of Operations, who from day one said he wants our users, our members, to be something more than just users of the software and something more than just affiliates. And 2 years from now, if you're just using the software and you're just an affiliate, the company's failed. And when it came time to launch, and we're still looking at and getting the actual software together, the company launched with Seed, okay, which is the self-growth platform that the company has. And unfortunately, I think it's underused. I know a lot of ranking affiliates who don't even watch it, which is sad. It comes with your membership. It's already paid for. I can't say it's free because you pay for it, but it's paid for while you're using Compass, and you get access to beta access use for testing, continued use of Traide Ringer. You've got Seed. And not just from an ego standpoint, but from a practicality standpoint, I was the first transformation specialist on Seed. And I spent 3 weeks talking about trading, and in particular, the head game required. And again, not multiple choice. And I listed all the attributes of successful traders. Again, not multiple choice. And one of those attributes of successful traders, in order to be able to analyze your results moving forward, if you're going to do anything with financial literacy, you have to understand some math skills and be able to manipulate results with Excel, or you're not going to be able to analyze what you're doing. You could definitely be going down the wrong roads because you're investing time and money in things that aren't the most productive. Now, by no means am I an Excel spreadsheet. I don't even own Excel. I use OpenOffice. But, simplistic Excel spreadsheet use, you need to master. It's one of those things that I don't care if it's not your comfort zone. Friggin' grow. It's all magic happens outside your comfort zone. Don't program yourself with negative talk. Okay? Get in there, set some time, 15 minutes a day. I don't care what it is. And start with YouTube. It's the world's second largest search engine, and there's how-to everything in there. Or go buy Excel for Dummies, Spreadsheet for Dummies, and start there. And just spend 10 minutes and put it in your routine and spend 10 minutes a day on it. I guarantee you in 6 months, you'll be able to do simplistic stuff. I put this spreadsheet together. I clocked it from time to start to end in 12 minutes. It's not anything masterful, but it does the job. So I brought up my little handy dandy marker pen here, my crayons, to draw on the screen. And I want to show you what we have. First on the left, it says Weekly ROA Calculator. This is the cool stuff about being able to mix trading results, actual trading results that you've achieved. Demo account. Okay? For live account purposes, projections, you can do the same. Now remember, past results don't guarantee future results. Past results don't guarantee future performance. But if you want to have some idea of what you might be able to do, i.e. if you want to forecast better than just wild guessing, even though it may or may not come true, what you can do is take 4 given weeks, and these don't even have to be consecutive weeks. They could be your best weeks and worst weeks, however you want to do it, and put in numbers. And I'll show you what this does. So let me just here, for sake of purposes, say, and you could put in decimal points if you want. Let's say the second week or a second week of using it, I had a 4% return. And in 1 week, I had a 3% return. And in 1 week, it was so-so. I got out early because of news or whatever. I only got a 2% return. I'm averaging 3.5% per week. It automatically populates over here, 3.5% per week as a gain. This now becomes a calculator for a 3.5% gain. So you can put whatever numbers in here you want to manipulate. If you want to use 5, just put 5 in all of these. This becomes 5 as the average. It populates 5 over here, and you're going to be compounding at 5% a week. So I use something here to be 3.5. Let's go back to our 5% because a lot of people like to use that number. So I'll use it, but I'm just saying we can play and we look at the difference because it's important to be transparent. It's important to see what reality might look like. Look, 2%, 5%. All right, so 5% ends up being my average or my desired look, and so it populates over here. We start a balance with $1,000. And so now we could scroll down. Now I have to look here again. I maintain our hypothetical results disclaimer here because we are talking about hypothetical calculations. We're doing it in a spreadsheet, so obviously we're talking about compounding out. Now the second thing, let's just do that. So $1,000. So if you look here, what that says is if I start week 1 and I have $1,000 in the account, $1,000 in the account, and I get a 5% that week, I've earned $50, and my account balance at the end of the week is $1,050, which means now, I'll switch to blue, the next week I'm starting at $1,050. And if I get another 5% that week I made $53, and so now I have $1,103 as my balance. And it just continues to march forward, okay? So now, if we say, well, what does this compound out? If I got 5% a week, starting with, my $1,000 account, we can scroll through and come down to what? How many weeks in a year? 52. So at 52 weeks, that $1,000 has compounded out to $12,643. Personally, I don't know many places you can go stash $1,000 and come back at the end of 12 months and it's $12,000. That's pretty cool. Obviously, if we're talking about 2 years, that would now be 104 months. And so we can look at that at 2 years. That's $159,000. So that same $1,000 earning 5% a week, that was $12,000 and change at the end of the first year, is now $159,000. And if we go out a full 3 years, we can now see that's $2 million. That's insane. 5% a week. All right. Now, you might look at that, and now you have a believability issue. Put $1,000 in, 5% a week, and 3 years is $2 million. That is a bit aggressive. So I put another realistic twist to this to make it more real. Because that's just me, guys. I believe in being transparent. I believe in being real. If I'm going to, my whole goal is to touch people's lives. I can't touch it by faking and being pretentious and using smoke and mirrors and hype. There's enough companies and affiliates out in this world with Forex companies that do that. To get the sign up, they'll give you all the hype in the world. But then you're left with reality, and that's why you get disenchanted. I just assume, tell you the way it is, and if it scares you away, see ya. But if you have the guts and the stamina to stay with it, the chutzpah, as I've heard, then you'll see what you can do. All right, so in addition to starting with $1,000, in addition to letting you select various rates to predict an average weekly return, I've put in a little weeks off scenario. For me, I personally take 3 weeks, but I'll just use 2 weeks in December, first week in January. I celebrate the winter holidays. It's big family time with me. It's sentimental. I'm just a sap for Christmas. I know there's other traders and people that I know that are like that. So it's very slow time for me. I'll do some manual trading. I'll probably do some Traide Ringer trading, but it's not going to be full on. Okay, it's just not. And not only that, the market's a little sluggish then because a lot of the speculative traders that contribute to that $6.6 trillion a day are winding down for their own winter holidays in the northern hemisphere. they're winding down for their end of year holidays as well. Thanksgiving, here in the States, it used to be Thursday. Go back to school on Friday. And then, the years go by, and you might as well take Friday off too. It's people going out of town, teachers come in, half the kids are there, and half of them are off going to grandma's house, and traveling for the 4 days. So all of a sudden the school system started going, Thursday and Friday. And then, about 10 years ago, I know when Dallas was in high school, there were a couple years where they just said, take the whole week off. They called it like a fall break. And so Thanksgiving is a downtime. I do all my shopping, and I do a lot of cooking even before Thursday gets there. And, just I got family, and just it's a good time to take a break. Okay? Spring vacation, Easter, whatever you want to call it. Parents with kids that have spring vacations or winter breaks or whatever the seasons are for you. That happens, and it's just, if you got little ones and school-age ones, it's just time where they're running around, and that's not their normal routine, and you might not be able to be in your normal routine, etc. Family. This could be sick time. This could be, grandma breaks her hip, and you, instead of the 3 hours you can spend on spare time stuff in the evening after work, you're spending 3 hours a night at the hospital for 2 weeks. The little one gets sick. You just, you're down, you're sick, you're tired. Just whatever. Couple 3-day weekends, and you take up Friday, you take up Sunday, who knows what it is, but just some time off. And then vacation, true scheduled vacation time. Okay, I went to Hawaii for more than 3 weeks, and while it was a working trip, I did take time off for myself to enjoy Maui that I normally wouldn't take off during my days. And so my manually trading was shut back, and I cut back my Traide Ringer activities a little because I just wasn't going to have the ability to monitor the account at the beginning and the ending day sometimes with some of the activities we were doing. So, account sometimes, and these numbers could be whatever you want personal for you. I'm just showing you a decent number to show the reality of trading. Market sucks. Well, we've had the software out now for 5-6 months. And we've probably had 4 times already in those 6 months where we said this just isn't, serious professional traders won't be trading this week. Those weeks where it's FOMC on a Wednesday, non-farm payroll on a Friday, the market's kind of erratic in between, not just a good time to put your account at risk, right? So those weeks that the market just sucks. Put down another 2, just random for whatever. And again, this might be much less than all this, but I'm just, it's representative example. I just want to show you the shifts in things. And so I have a total of 17 weeks out of the year that I wouldn't be running my trading software. And what that says then is if I take 17 out of 52, I'm left with 35 weeks I can trade. So in 1 year, I get to, my results would be the same as looking at 35 weeks. So instead of the 12,000, I actually make 5,516. That's just being more real. And again, this number, the number of weeks off might be high, might be low, whatever. It also means, as the math's done for us automatically here, that 2 years would represent 70 weeks. So I can just scroll on down to 70. Yeah. And see that at the end of 70 weeks, which would now be 2 years, I'm at 8,000. Okay. And then, whoops, that's not 70 weeks. 70 weeks is down here. My bad. I knew that number was way too low. $30,000. End of 70 weeks, $30,000. And lastly, we can go up here and see that at 17 weeks off per year as an average and 35 weeks per year trading, 3 years would represent 105 weeks. So I can go down to 105 weeks, one below what would be 2 years. And that's what I would have at the end of 3 years, taking 17 weeks off a year from trading Traide Ringer, which gives me a $167,000 balance. That's pretty realistic. Still, I don't know where the average person could take $1,000, put it anywhere to invest, and at the end of 3 years have $167,000. Now, this is liquid. This is hypothetical. Obviously, in your jurisdiction, be that country, state, province, municipality, city, whatever taxes are, they are your obligation. In the United States, understand that taxes are based on what you earn, not what you withdraw. Just like a direct deposit, you pay on the direct deposit. Your income is your taxes are paid on the income that's deposited to your account. It's not just when you go to an ATM and pull out $50. It's what you earn. So if your trading earnings are a certain value, that's what you pay taxes on. So taxes are your obligation. I'm just showing you the simple and hypothetical math. And I'm being very conservative. I'm always very conservative with my numbers because I want it to be fair. You know, customer support always should be, sales should always be about under promise, over deliver, not the other way around. Not overhype and then can't deliver because you hyped it up too big. So hopefully this provides some value to you as to what Traide Ringer can do. The bottom line is it's a long-term compounder. You could see in the first, oh my gosh, 10 weeks, oh wow, it made you $629. That's nothing to retire off of. But you have to pay the foundation. Compounding is all about doing the work, and then the results get bigger and bigger and bigger. And this is what happens with compounding. You have to understand what compounding is. Okay, we did enough on the calculator. Let's put it away and let's continue on. And okay, so how you frame, whoops, still missing it. Nope. Let's get here. So Traide Ringer is a long-term compounding wealth accumulation vehicle. Let me say that again. Traide Ringer is a long-term compounding wealth accumulation vehicle. We talked to you about how reward to risk is inverted with EA software, especially EA software like Traide Ringer that does a lot of trading and does a lot of counter trend trading. You're going to have drawdown. And so you have to understand its function is as a long term. That rules out Holy Grail. That rules out lottery ticket. That rules out, oh, I'm going to put in $500 and I hope it's going to make $2,000 so I can pay rent next month. It's a long-term compounding wealth accumulation vehicle. The more you think of it as trading, the more you're going to struggle with consistency using it. Because it's not about trading. It's not about trading. There's aspects of Traide Ringer you will never understand. The developers are not going to release it for, intellectual property purposes and competition purposes. They're trading trading hedge funds with it. There are elements of Traide Ringer, I don't even know if it's been fully exercised yet. There could be algorithms that are dormant, just waiting for certain market conditions, and that might not show up for 8 months. And then all of a sudden, certain things are happening. Anybody that says they know what Traide Ringer's doing is not knowing what they're talking about. But if you think of it as trading, you're going to struggle, which is why the traders that want to be traders, the aspiring traders that are trying to use it to trade, they're mixing so many bad things together. Yet they don't know how to trade, but they're going to trade with Traide Ringer, this genius, brilliant, incredible piece of software. Rather than keeping it as a second income stream, they're going to try and merge it and create one income stream. Wrong. Doesn't matter that you're adding it using your trading in a separate account. You should never commingle because then you'll never know the results individually, what your trading is doing and what Traide Ringer is doing. Always separate accounts. But don't try and trade with it and create one income stream. It's a separate income stream. Manage this one, as I said. Once you learn it, it's not going to take you but 5 minutes a day. So the only true comparison between trading and Traide Ringer is that the technical stuff. Now, for trading, we're talking about charts and analysis. And then the almighty settings. I'm a little bit of sarcastic there because it's just oversaturated in that everything's all about the settings when it's not true. It's about your understanding of what the software is and the rest of the stuff I'm going to go through. So the only part that's in common is charts and trade analysis for trading and the almighty settings for trading represent and contribute only about 10% of your potential to win. So all the emphasis on the settings, you master the settings and you make money, that's wrong. You do have to master the settings, make no mistake. But that's not the formula. It doesn't mean, I've mastered the settings, it's time to go live. All right? Because it's only going to contribute to about 10% of your potential to win. But a lot of you are going to be resistant to this because traders always are. See, traders just want to get to the charts. Traders just want to get to the money. That's because you're gung-ho on making money now because you don't understand what Traide Ringer is. You haven't positioned it as the first paragraph as this long-term compounding wealth accumulation vehicle. You're demanding results from it daily. Oh my God, I'm in 7% drawdown. Oh my God, this week, what am I going to do? I'm 8% drawdown. Oh my God, this week I've only made 1.34%. You're trying to see it as short-term trading rather than a long-term compounding wealth accumulation vehicle. It's not about trading. And the sooner you understand that and come at it from that framework, the sooner you have a chance of doing really well with Traide Ringer. You're resistant to this because you're so gung-ho on making money now, even at the expense of knowing what you are doing in trying to make that money, meaning you don't know everything you need to know. Here's a clue that you're not ready to be using Traide Ringer. If you say something like, gee, I hope I don't have drawdown this week like I did last week. Gee, I hope it goes my way. Gee, I hope this trend reverses soon. You shouldn't be using Traide Ringer. Because you're not seeing it as a long-term compounding wealth accumulation vehicle. You're seeing it as a short-term player. Now, one reason some of you are taking on that orientation because you're sitting at the bottom tier of capitalization. From the start, we were said, this was tuned down from a $10,000, $100,000 to a minimum of $1,000. I've seen people come in with $500 and try and make it work. I've seen people come in with $1,000 and $700 and try and make it work. At $1,000, if everything goes your way, you might be able to screech by. You really need more like $1,500 to $2,000 to be conservative and to get past the drawdowns without having an equity protector triggered. And even then, I'm not saying you won't. Can't guarantee anything. Nobody can predict the future. But if you're trading with that, I hope it reverses soon. Gee, I hope it goes my way this time. You are putting all your money at risk because you haven't done the stuff in front of trading. But the reason you're trading is because you think you've mastered the trade settings. And that's what you think you were taught is what was required in order to start trading with Traide Ringer. How you frame your EA software will determine your success with it and the steps and process you should go through before trading demo. Before trading demo, nonetheless, money in a live trading account. So I'm saying these are the question mark. These are things that occupy the question mark, not just the settings panel. So here we go. Understand the difference in trading and managing Traide Ringer. We've been over that. Understand the differences in risk. In manual trading, you have a positive reward to risk ratio. In AAs, you have an inverted and large risk to reward. 7 to 1, 10 to 1. That's not trading. There's no trader in the world that runs 1 to 10. So we can't call it trading. You need to be the CEO of your own $10 million financial company. You need to see yourself in that role. Quit being the victim. There are no victims, only volunteers. Your subconscious likes to stroke you to think you're a victim. Oh, yeah, I've seen the post. Oh, my God. Traide Ringer blew my account, and they're trying to say it's on me. Oh, my gosh. All those people in the first 3 days of Traide Ringer when it was out, they didn't know what they were doing with the settings, but then they blamed it on Traide Ringer. And then when some people called them on it and said, no, it wasn't Traide Ringer, it was the settings you gave Traide Ringer. Oh, yeah, blame it on me. Such victims. Be the CEO of your $10 million company. Set expectations that are proper. We just went through how it's a long-term wealth-building, compounding vehicle. So adapt that and adopt that as your expectations. You do not do anything that is, I'll cross that bridge when I get to it. Because now you're putting all your money at risk if that's the attitude you're taking. Be accountable for your results. They're your results. The software does not win or lose. The market and you make it do so. Say that again. Traide Ringer does not win or lose. Oh, it was a good week for Traide Ringer. Wrong. The settings that you had based on the market conditions Traide Ringer encountered were satisfactory to generate a decent return. Oh, this week sucked, man. I got trashed. Traide Ringer sucks. No, the market conditions and the settings you gave Traide Ringer to adopt to those market conditions were not favorable, and therefore your account drew down or you lost money. But it's the market and you. It's not Traide Ringer. You have to frame it that way. Quit being the victim. Do not seek advice when stuck in a live account. See, the only reason you're asking advice, my USD JPY is 50% drawdown. What should I do for the weekend? My sarcastic answer, and I've shared this with a couple leaders, would be, wow, you're asking what you should do with 50% drawdown? Here's what you should do. Close out your trades, quit trading live, and go back and learn things. You shouldn't be in the position where that's happening to you. And you're asking what to do about it. See, you're missing a plan here. You're missing the pre-plan, because here, all you were told was you need to master the settings. Where's the step in here that says you must have a strategic plan? We'll talk about that shortly. The what if this and what if that with Traide Ringer, where's that? Oh, wait, I wasn't told about that. You're right, because you're being told about it today. Don't seek advice. The other thing is, I'll just say this. We know there are agents and investigators from some of the government oversight authorities hanging out in groups, hanging out in chats. And we also have competition doing the same. And they're using leading questions. Well, when I want to be sure I understand this before I make my investment. Oh, sorry, Mr. Prospect. Hold on 1 second. First of all, Economy is not an investment company. We're not a Forex company. We're not a trading company. We only, through membership and subscription, give you access to trading software. We don't take your money. You make no investment in Economy. So you cannot use the word investment when we're talking about it. So you have to stop and correct them. If you don't, it's implied that you agree it's an investment. And if those investigators or the competition collects enough of those, our company could be at risk. So be leery about people asking you for advice, even if it's people you know. Relationships can sour, and all of a sudden the advice you gave somebody in a screenshot, in a Facebook message, in some private group gets shared. And next thing you know, you're being suspended. Next thing you know, if you've already been suspended once, you could be terminated. Don't give advice and don't give recommendations. We can't. And therefore, if we're not supposed to give advice and recommendations, don't ask us to. And the reason you're in that position of asking advice about drawdown, as an example, is because you never did a plan to tell you what to do when you get that drawdown. And that should be done before you put money at risk. As chairman of your own CEO of a $10 million financial company, you report to a board of directors, i.e., the beer and bag of chips as you sit down on the sofa crying about your losing week with Traide Ringer is not where it ends. You have to get up the next day and go to your board of directors, be it 5, 10, 20 people, and tell them what you're doing and how this happened. And now you can't be the victim. This is the buck stops here. You can't be a victim. Oh, I don't know. The Traide Ringer just didn't do its job. Traide Ringer didn't dig out. I hate that phrase. That it did dig out or it didn't dig out. It is brilliant software, man. I mean, I'm telling you, after 16 years, I can tell you this is one incredible piece of software. But it's different than trading. And as I say, the more you try to treat it like it's trading, the more you're going to struggle with it. Self-development's personal growth required. So, again, is Traide Ringer rocket science? It absolutely is not. It requires discipline and patience, and it requires personal growth. And the frustrating thing to me, and I mentioned this a little earlier, is the company has this platform called Seed. There's recorded sessions there, and I guess 90% of the membership hasn't watched those sessions. Weren't there live and hasn't made time to watch the sessions. Because I get asked questions all the time that were already answered in my 3 Seed presentations. That, oh, by the way, I took plenty of time putting together. So you would have the knowledge. You need to fully understand compounding and exponential curves. Oh yeah, I read the compound effect 6 months ago. So between understanding Excel and the fact that you read the compound effect, I can get you right now to take the penny doubling routine and show me how much money I would make on the 31st day. Because you do understand compounding and you have simple spreadsheet skills. If you can't do it in a spreadsheet, you better be able to do it on a piece of paper. If you can't do it on a piece of paper, you don't understand compounding. I'm just saying. It's just simple. You either understand it or you don't. And if you don't, you need to learn it. Because if you don't understand compounding, you're never going to frame it as a long-term, wealth-building, compounding vehicle. Because you don't know what one of those words means. Oh, it grows bigger over time. That's not what compounding is. What's the damage if I take $5,000 out of my $100,000 account and I've been earning 5% a week? Show me the damage at the end of 2 years. Now you understand compounding because you can see the negative aspects of compounding. When I take money out of what was there and it's now compounding at a lower rate because there's a smaller balance, show me the difference between the original balance and the secondary balance. If you can't do that, you don't understand compounding. You can't analyze what you're doing in your trading. You're putting all your money at risk because you don't know what you're doing. Now, this is going to scare some people. Sorry, I'm transparent. I've seen people come and go. You know, I've worked with over 25,000 traders. Do I have 25,000 successful traders because I touch them? Absolutely not. My statistics probably don't, differ much than the entire market. Probably less, to be honest. Meaning 95% fail. Well, if you're so good, why do they fail? Because it comes down to head game. It comes down to discipline. It comes down to Gregor's law. People multiple choice. People want to be victims. And that seed presentation in those 3 sessions, I covered the big head game triad. RAS, ego, LOA. Some of you are going, what's RAS? Some of you are going, what's LOA? What's the triad about? It was covered in seed. The product you have for free because you already bought your membership. And is required to understand before you're going to be successful with Traide Ringer. Yeah, I remember something about that. If you can present it back to a team of 50, then you understand it. If you don't understand it well enough to teach it, I'm not talking about your fear of public speaking. I'm talking about the material, knowledge of the material. Public speaking is a lot about confidence. So all the things I covered required to be a trader. There was a big long list covered in the 3rd session. We kind of went through it speed reading, but we covered it. They were there. They're there in files for you to go back and look and take notes on and put down. Oh, Steve covered 37 things that it takes to be a successful trader. Let me see which ones I'm strong at and which ones I'm weak at. Why would he take all the time to put this down if it's not necessary? You have a life game plan. Health, spiritual, fitness, well-being, relationships, money, vacations, toys. And that includes your investment strategies, your financial growth, the various avenues that you have to bring money in. What are those various portfolio plans? What are those financial goals? What is your what and why, not just at the big picture level, but down to why are you in the Forex? Why are you in economy? Why are you using Traide Ringer? And again, I can tell you 95% of you don't have that game plan. I could say take a screenshot of your written goals with your action plans for them from January 1st, 2019, And 9 out of 10 of you don't have that to send me screenshots of. I'm not just talking about, I want to be rich. I'm talking about the game plan, the massive action plan. Tony Robbins, not just action, massive action plan. And what's this have to do with Traide Ringer? Understand that your needs or wants, that's supposed to be do not change certain realities. I've seen people try to adopt their situation. I've seen people try and take their situation and force it on a system that wasn't built for it. I've seen people who try and learn some of my specific software that takes 3 to 6 months to get a good handle on. And because they're being downsized in 60 days, well, I'm going to learn this in 60 days. Well, no, you aren't. You can't take a process that has a time element to it and change it merely because that's what you need. You can't make Traide Ringer a holy grail, a lottery ticket, just because you need that in your life. Find another vehicle. Traide Ringer is what? It's a compounding, it's a long-term compounding, wealth-building vehicle. It's not a short-term cash flow generator. So understand your needs and wants have nothing to do with the realities of how Traide Ringer trades and what it can do with you. And if you look at that compounding and be able to create your own, can you give me the link to that spreadsheet? No, build your own. Get a piece of paper and pencil and you figure it out. Here's my account balance times 5%. Well, how do I do that? I never learned percent in high school. Hey, go to YouTube. This is why 95% fail and 5% succeed, because the 95% won't go out of their comfort zone. Well, I don't know how to do this. I don't want to learn. Well, I don't have the time to learn all that. Okay, fine. Be stuck in your routine. Be stuck where you are. The 5% take on the MacGyver attribute. I will, no matter what, find a way. They take on Andy Andrews. I persist without exception. Without exception means there are no excuses. There are no obstacles. That's what without exception means. Michael Jordan, failure is not an option. We can go on and on with all the various ways we can say the same thing, right? Now, this is the big one. You have a specific strategy or a specific strategic contingency, a plan for Traide Ringer, weighing risks in advance. Your partner signs off on it if you have a partner. And what this is about, we've talked about this before, Fortune 500 companies that do strategic retreats once a quarter. And they go there and it's all about, what if our sales increases 20%? What if our sales increase 50%? Do we have the inventory? How do we ramp up manufacturing? Which of the 3 plants do we put, the night shift on based on availability, based on salary, whatever it is, minimum wage requirements in that geography, based on the management, based on raw material costs to get to the management. They figure these things out in advance. Why? You exercise the emotions out of the way. The division chairman, the plant manufacturing managers, the buyers for your raw material, let them have their fights now, come to logical conclusions and get it out of the way. And now I have a game plan that says, if sales increases by 20% this month, in a given month, we already have step 1 through 15 of what we're doing. And they do the same thing for the negative results. What happens if we lose 10% of our sales? What happens if we lose 25% of our sales? Do we take a 30-day? No big deal. We'll just wait and evaluate it again in 30 days. But then at the end of 30 days, if we're down 10%, what do? Do we trim employees off equally across the board at all 3 plants? Do we just pick one plant and, cut them down 40%? Let the plant managers argue it out. Let the vice president of operations argue it out. Get all the emotions, all the cussing, all the screaming, all the deliberations. You get it out of the way. So when that time and event comes where you're now 15% down in sales, there's no emotion because everybody already agreed on the plan. This is how you remove emotion and ego from your financial activities, be it trading or be it managing Traide Ringer. I already know what I'm going to do when Traide Ringer gets to 25% drawdown. I already knew if I have 100% drawdown in terms of equity protector, I know what I'm going to do at 50% drawdown. I know what I'm going to do at 75% drawdown. Maybe I infuse more money that I have sitting waiting. We'll talk about that. I have a drawdown matrix like Mike Sancho put together for version 3, and we distribute it as a cheat sheet along with the settings. If drawdown is at 25%, I move my range to this percent. If drawdown gets to 40%, I move my range here. Now we can multi-layer that because we have multipliers in there for both position sizing and range distance. Put your plan together. What can you tolerate? What is the absolute limit you go to bed with and wake up the next morning and be okay with whatever your account got closed down and shut down and lost because your equity protector got hit? Is that 20%? Is that 35%? Is it 60%? And is that a reasonable number? So you have all of these things done in advance. And then you won't end up in a situation where we were 2 weeks ago, where I had a half dozen people who were very upset because they were deeply drawn down. They were approaching being margined out. They had 100% equity protector. And they were, because the run on the euro just kept going the wrong way. And I'm like, okay, let's say it reverses now. Oh, I gee hope it does. Let's just say it does. What are you going to do? What do you mean? I want it to reverse. Reverse to what? If you gain back 30% of what you lost, will you shut down there? Or do you want 50% recoup? Are you expecting the whole thing to recover 100% of your drawdown before you exit? If you got back 50% of what you lost, what are your measures? I don't know. Can't do that, guys. You have to have the answers in advance, because if you understood having a strategic contingency plan and you understood this, you know, if you get into the point where you're in the heat of a moment and you need to logically make decisions, you can't do it with emotion. If you're upset over where your account is, you can't do it. And guess what? That was all explained in my 3 seed presentations. Because guess what? You're human. All humans have the same anatomy. All humans have the same brain and the brain realities. And what happens when you have emotion is your amygdala gets flooded with enzymes and neurotransmitters, and it overtakes the RAS that's already screened what your brain gets to process from the millions of stimuli that are out there. And the amygdala, in its wisdom, for whatever reason, lets that emotion, and the emotion floods it with those neurotransmitters, and the amygdala intercepts the information that's been screened in and scrambles it and doesn't allow it to get to the part of the brain that needs the processing it, i.e. you are in a fog. Which is why when you get really emotion, when you have a lot of emotion going on, you can't think straight. Your cognitive processes are shut down. So you don't want to be in a position where you got money at risk and you can't think because you're upset. This is why you have to go back and understand this stuff. This is why skipping this stuff in the middle and just trying to master the settings won't work. Because you don't understand these processes. If you understand these processes, you know you have to put a plan in place. So when I get to certain conditions in my trading, in my Traide Ringer performance, I know what to do. Just like the Fortune 500 company that took the time to do their strategic planning to the positive and to the negative. So next week in part 2, I'm going to give you a worksheet to help guide you through that. And if you want to run without that worksheet, See, if you ask a question, if I see it posted in a group, I'm just going to say, oh, let's see your worksheet. Say, take a screenshot of your worksheet. Post it here. Everybody has a cell phone. Everybody has a camera. Go ahead, take it right now and post it. Because you know what? Guess what? You know already what's going to happen. 9 out of 10 people aren't going to have the worksheet to post. Why? Gregor's Law. They think they can skip stuff. Why? Because they have ego. Because they won't leave their comfort zone. And they're going to be struggling and continue to struggle because they're going to continue to bring emotion to their trading, to their results, especially when they're negative, and they don't have a preset plan in place. And so the emotions are going to shut them down. And even if they are logically, normally an intelligent person that could fight their way out of a paper bag, they probably can't then because they're human. And this is what happens to humans when we have emotion. So you do all the things that generate emotion up front. Holy crap, if I actually lost 100% of my account, we'll talk a little bit more about that as well. Go on the offensive. If you're on the defense, it's only because there's no plan in place. I'm not saying you can't have a plan that calls for defensive measures. Some of the things we did, like going back to talking about Sancho's countermeasures for drawdown in 3.0, some of those have been extended. So not only can we take countermeasures, they are defensive posturing. But it's defensive posturing strategically, not because of emotional reaction. Otherwise, you're just a deer in headlights. What are you going to do next? I don't know. What happens if it does this? I don't know. What if it gains back this much? I don't know. What if it loses a little bit more? I don't know. What is it you're hoping for? That I fall asleep, wake up, the trend is totally reversed, and I'm 12% in profit. Good luck. Capitalization, we already kind of talked about that. Right? People trying to come in too slow, too low. We had a great conversation with somebody doing really well with Traide Ringer in the Atlanta session 3 months ago. And we always say, as part of the disclaimer, you should only trade money you can afford to lose. And we came out of there understanding this is a good idea for Traide Ringer because of the drawdown. Figure out the money you can afford to lose, divide it in two, and that's what you fund your account with, is half of that. The other half you put in a credit wallet right there so I can do an instant transfer. And that becomes part of my strategic plan. If I'm running 100% EP and I get down to 80% drawdown and there's only hundreds of dollars left, I either do this or I do this, and my preference is to do this. My preference is to add another $500, and I'll just pull it over from my wallet and add it instantly. And now my drawdown might be able to withstand the further drawdown if that's within my risk tolerance. All decided in advance. You also have to decide whether this is a one-shot deal. Don't trade money you can't afford to lose. You talk it over with your partner. Oh, we can put $1,000 into it. Yay! Sign me up. Let me sign this. How do I fund my account? Oh, okay. Let me trade demo. Get my account funded. I'm ready to go. And you go before you're ready and you blow your account. Are you done? The way you stay in the game of using Traide Ringer as a long-term compounding wealth building vehicle is by being able to continue to use it. If you can't put money back in your account because you blew it, then you're done. And then you're probably even too lazy to have thought through the fact that you're not even going to cover your membership fees anymore. And so because you lost the $1,000 that you had, you're quitting and canceling your membership. The way you play the game tomorrow, and the longer you stay here, the longer you use Traide Ringer, the more it's going to make for you. It's flat in the beginning of the exponential curve. Understand earlier what compounding is and what the exponential curve looks like. Roxy. So I've also expressed the fact that $1,000 is on the weak side. You're going to struggle with where to put the EP. You're going to struggle with margin and a negative account balance eating up your available margin. and the potential for you to get taken out at a lower drawdown, and other people exist and get through it because they had slightly higher capitalization, that exists with $1,000. Now, I know we've been taught $1,000 is it, but this is change that's made available because time and experience and results have showed us. Sometimes it needs a little bit more than that in order to be able to do good. And so, even at that, don't make your $1,500 the last that you have, because if you blow that, then you're done. If it's a one-shot deal, right? Also in capitalization, I say this in a few minutes, learn to trade. We got this Compass product that's also part of your membership. Learn to trade. Use Compass. Learn to get returns from it. Past results don't guarantee future performance. Learn to get results with it, and you can take those profits and put it in your Traide Ringer account or in your wallet. All right, so we talked a little bit about capitalization. Fully integrate, conserve and protect, then grow your account, and the happy dance as money management. So conserve and protect. So what I've been doing for many years now is teach my manual traders that conserve and protect is the best strategy you can use, because if you adopt conserve and protect, it means your utmost objective is to protect your money. And what that means is you will never find yourself saying, gee, I hope this goes in my favor. Gee, I hope it reverses soon. Gee, I wish it does this. Because when you say those phrases, you are gambling. And gambling is not conserving and protecting your capital. I know this sounds horrendous. I know this sounds like it's limiting your ability to make money. What I'm trying to teach you is the things you need to do to stay in the game, because as you see, if you stay in the game, this thing will make you good money. Past results don't guarantee future performance. Your results may vary. But you can't play the game tomorrow if you don't have money. You have to get through today. And you want the money at the end of the day today to be the same or larger. Now, I don't mean day in terms of day, and I don't even mean week in terms of week. I do mean month in terms of Traide Ringer. At the end of the month, you want your money to be the same or greater. That's how you make compounding work. You may stretch it out some. You may accelerate it some based on results. But the bottom line is you understand you have a long-term compounding wealth-building vehicle. It has nothing to do with short-term. Conserve and protect, then grow my account. So I've got to have conservative strategies. And the other way I conserve and protect is by having a system of strategic plans with thresholds in place before I trade live money. And not the go-to signal for trading live money is I've officially finished my 10 days of demo. If I could convince Hassan and Sal and Candace, it would be a full month at a minimum. So adopt, conserve, and protect. And anytime you do anything in Traide Ringer in terms of setting, in terms of when you're setting a plan and you know where the thresholds are, if you set it to be, if you ask yourself, how does this advance myself in conserving and protecting my account, or does this put me in a gambling mode? That's your litmus test. Do not see Trader as a passive cash flow product or holy grail solution. We've already covered that. And as economy grows, just with simple vision for that growth, I believe the company will have other offerings. I don't have any inside information. I'm actually under an NDA, so if I even knew about it, I couldn't talk about it, but I don't know. I'm just guessing. We were told at the very beginning there were 3 products that we might see, and so far we've only seen one of them, so I guess there are others in inventory somewhere, maybe. But regardless, don't position Traide Ringer as a passive cash flow product or a holy grail solution. This is where I say don't take your situation and try and force it on what Traide Ringer is. Get it right. This isn't meant for weak souls, and this isn't meant for people who have nothing more than a piggy bank to invest. Hate to say it. Compass, you can do that. Compass, you can open a trading account for $25, pay your membership, and you can trade away with Compass and make lots of money. Past results don't guarantee future results. Most people lose. And then if you generate profits, you can put that in your Traide Ringer account. You need to get past, in order to have the right attitude, in order to have a plan, you need to get past this second from the bottom. I must make more the first month of trading with Traide Ringer than the membership costs. I had somebody the other day that got really upset with me. They sent me an email. They intercepted my post intended for field leadership and decided, because I had an email address there, they would send me an email, and they were complaining about the cost of the product. They were complaining about the $169 a month. And their reason was faulty math. Their reason was you have to have at least an $8,000 account to break even. And I'm thinking, wow, 2.5% a week times 4 weeks would be 10%. $8,000 times 10% would be $800. You've covered your cost 4 times over, 5 times over. So the person didn't even understand, and I'm not trying to be degrading to them. It's just, it's hard to intellectually debate somebody when their premise is faulty. And even at that, I came back to this statement and I said, this is a long-term compounding wealth-building vehicle. There's nothing about an exponential curve that shows fantastic growth the first several months. If you take your penny doubling, understand, you don't get to dollars until like day 8. And then it's like $3. All of the compounding takes in the last 2/3 of the growth. So your first weeks, your first months of running Traide Ringer on a nominally funded account are not going to have the proceeds, the returns, in a conservative fashion to cover your membership. That's stuff you need to work out, and you need to decide in advance. Trying to make it do that is what? Trying to make your circumstances fit into Traide Ringer, even if it wasn't designed to do that. And the prescription there, the result there is going to be disastrous. You need to post your results in the results groups. And you need to explore those results groups. You can do a lot of study in those results groups in terms of understanding what's going on. Now, we've been an hour and 27 minutes. I'm going to continue because I want to finish part 1. I could put it off till part 2, but bear with me. The nice thing about a recording is you can stop it and come back to it. So here's the rest of this. You need to extend your demo trading time. Learn the settings, the multipliers, go through Bren's, the guy that generated the multiplier calculator. Get that calculator. If you don't even know what I'm talking about, you need to catch up. Get that calculator, put it through its paces, understand it. That's why we have support groups, chats, and channels. Hey, I downloaded the calculator and I was doing this and I don't understand something. Somebody will always help you. We have a beautiful community with beautiful resources. You're not going to get this anywhere else. Understand, one more time, we have no ideal or recommended settings. I see dozens of posts a week. I don't understand what happened. I was using the company's recommended settings. The company does not have recommended settings. The company doesn't put out anything about settings. These are leaders and affiliates and traders that put out settings. And even at that, they're not recommended or to be taken with advice. They are merely based on what we see everybody doing. These are settings that, for the most part, allow you to stay in the game and make some money. But they're not company recommended settings. There's just no such thing. You either be aware of the news or you avoid it, but don't be half pregnant. In other words, some people will say, I've looked at the news. I know Susan does this. She blatantly said it the other night on a software management call, Software 101, where she's looked at the history of news and she feels that the jump in price, if there is some, hasn't hurt particularly in the past. Again, past results don't generate future results, don't always are not always indicative of future results. But based on the past, she sees in her risk avoidance or risk aversion sphere that it's an acceptable risk to trade through the news. Some of you may see it differently. That's fine. If you're going to trade, if you're going to shut down during news, then you have other considerations you need to make sure. You need to make sure your VPS is set to the right time. You need to decide how much before and after you're not going to have Traide Ringer trade, which is also part of the settings. Be computer savvy, meaning do your VPS and Microsoft Windows updates, understand how Microsoft Remote Desktop works, understand how to get a trading station on your cell phone, even get a remote desktop on your cell phone. Get the technology down. Build a checklist. This is part of your plan. Before I go live, here's my checklist for every Sunday. Now, Jamie covers this. Jamie? Yeah. Susan's partner. Excuse me for getting it wrong if it's Jesse. It might be Jesse. Jesse or Jamie. He talks about his checklist for going through before Sunday, and that includes, ensuring you have updates done on your VPS. So there's no possibility of anything being flawed or, you minimize that chance. Trading is always about putting probabilities on your side. So you minimize the probability of something going wrong. Shut down your MT4 and relaunch it. Make sure you really are trading when it's trading time, right? Consider learning to trade. There is no doubt, even though I don't want to label Traide Ringer as a trading piece of software, I know that's what you think it does, but in reality, it is what? A long-term compounding wealth building vehicle. Differs totally from trading. We've already discussed that just on the risk basis, on inverted risk. But you'll have a better understanding of what it's trying to do, and you'll have a better understanding of the realities of the marketplace, and you'll be able to prepare a better strategic plan. And you have income insurance. Greatest benefit to being a trader. And if you're a builder and you're an affiliate, you'll be able to attract anybody, whether they're a network builder or a trader. You'll be able to attract them because you actually understand trading. So consider learning to trade. Line breaks destroy dreams. Keep your customers informed. What do I mean by that? Once a week I get somebody different coming to me saying they either already have or they're starting their own little group. And I fall back on our conversations on mentorship with Michael Manuel and Matt Ward, who have talked about, unless you're a 3000, you just need to plug in and move. Do your thing. Duplicate. The only reason you're going to have a team as a 600 or 1500 and you have your own little groups and own little chats and own little this and own little that is because of ego. It's a distraction to them. And what I've already seen in most of the situations where people have created their own little groups and they've not kept their team plugged into our groups. And you know what happens then? I see people, oh man, whole bunch of us, everybody on our team blew their account last week. And I'm sitting here, all our teams are, hitting 5%. Again, past results don't guarantee future performance. I'm just citing this as an example in contrast. How does everybody on that team blow their account and everybody else is making money? Show me your trading report. Oh, well, there's Euro Aussie right there in the second ring. Why are you trading Euro Aussie? Why not? Because there was a break in line. Somewhere along the line, somebody decided to create a group or not plug them in, one or the other, and they had no idea that the developers and the hedge fund traders who traded this thing said, oh, gee, the Euro Aussie appears to account for over 70% of the drawdown and only about 20% of the profit. It doesn't make sense to be trading it. We're taking it out of the hedge fund rotation. You guys do what you want. So boom, what do? If the hedge fund guys aren't willing to trade it, why should we? It's gone. Breaks in the line will cause those things, and you're stealing dreams from other people for your own ego satisfaction. It's not worth it, guys. Now, if you see some big void in what Steve and Amy are doing, if you see some big void, if you're from Sarah's team or Mike's teams, if you see some big void in what Sarah's doing or Mike's doing, go to them and say, gee, have you thought about doing this? Gee, would this help? Take them your ideas. Take them the things you think you want to be innovative with and create a better environment for your team. Take them to them. Have those counseling sessions. Because one of two things can happen. They're going to say, yeah, well, here's why we don't do that. Or they're going to say, that's a great idea. Let's put it into play. Rather than you just on your own going off and trying to start something. Don't break line. Plug in. Now, I know we're going to have a bunch of different people listening to this. If you're on Steve and Amy's team, plug into Steve and Amy. We plug you in routinely to everything Market Hackers. We go to the Market Hackers software management class, software 101. We go to, most of the time, software, mentorship calls. We use their systems. We're all about supporting the entity and the ways of Market Hackers. And the things that we do different come from years of evolution and understanding certain things, and principally because we're trying to build a trading culture as well. So we are a little different in that sense. But don't go create your own thing, If you plug into Sarah and Mike, they're plugged into Market Hackers. You can get everything you need from training to support. And on top of that, Sarah and Mike also have their own support channels. In addition to the general ones, from Market Hackers. So, wow. Why create something new? It just creates more management for you, and it creates a greater chance of stealing team members' dreams. Because you're creating breaks in communication. And if you're so innovative, you've got great ideas, not to be sarcastic, I'm being 100% serious. If you've got good ideas for me and Amy to improve our team and our structure, infrastructure, and our resources, please let us know. Nobody's going to get their head bit off for it. If it's going to make us better, we're open to that. Okay? So let's stop the line breaks. Training, I don't know what training is, but Traide Ringer specific training and support. There's a lot of it. You've got the Zendesk. You've got, as I mentioned, the Market Hackers Software 101 sessions, which are currently Wednesdays at 9 p.m. Eastern. Susan is generally the main host on that and has been. And she was hosting that kind of call in the previous AI software company. She does a good job at it. And let me tell you, to get in there and help Software 101 to teach the same thing so there's a consistency and duplication every week is to be commended. That's her free time. And she's doing it to help you. So you get to it. And if you don't go to it, don't forget to get your new people there. To get them, it's part of the overall training. It's available. Our Disruptive Traders team, that's me and Amy, we have our software management sessions on Thursdays. This is so we can go to the Wednesday session with Susan and Market Hackers, Cameron, whoever else is hosting with her. And if there's anything inside, above and beyond Software 101, we could bring it to our Thursday session. So what we're doing is not saying don't use Market Hackers, go to it. And for those that don't, guess what? We're going to go there and we're going to bring that information back. And if it actually can augment and complement what we're doing, we'll add that and make sure we include it. But our software management sessions are Thursdays at 9 p.m. Eastern. Disruptive Traders. We have Disruptive Traders TV, Traide Ringer specific session. Stephen Ma, great guy. He's been with me for years. Real strong leader in terms of understanding the EA. He does a lot of EA work. And he's got as good a handle on Traide Ringer as anybody I know. Every Thursday at 5:30. Today he canceled it in deference to allow us to do our session at 5. But that's a free resource. And if you don't know how to get it, ask me. Then we have Disruptive Traders TV, MT4 broker and VPS sessions. My son Dallas does those on Mondays and Tuesdays at 2 p.m. Eastern. You got brand new people and they've never traded before, and you're going to install Traide Ringer for them and hope they could be on their way? Wow. Here's a way that they can get an overview of MT4. They can have their questions about MT4 answered, their broker, their VPS. These are live sessions, not sponsored by the company. This isn't even part of Amy and Steve's team. This is my own stuff that I'm making available to Steve and Amy's team and other people. We have Michael Talento, Friday morning trainings, trader trainings on Friday mornings, very often focused on Traide Ringer. We have forthcoming economy education offerings on Traide Ringer. It'll be one of the first things, that I attack. You need to plug into your team's groups, chats, and channels, whomever your upline is and whatever they're doing. Mike, Sarah, Amy, Steve, whomever other upline leader that you have. Help your customer get 3 and free. So this is talking a little bit to affiliates, but if you're a customer, understand the advantage of getting the 3 and free. It's just what it says. You can share the results group. You don't have to be a whiz at it yet. This is the benefit of the results groups. I just got started, but here's the reason I got started is look at these hundreds of people who already have results. That showed me it can be done. I'm going to learn this so I can do it too. Hey, you want to try this with me? Here, go look at the results group. Get yourself free. That removes all pressure to be trading live to try and cover your cost, even though you shouldn't think that way. Psychologically, just understand it removes that pressure. And if you want to go past that, refer others, build an income stream. Not only can you cover the cost of your membership, you can augment and super accelerate, hyper accelerate. Amy and I use that phrase a lot. You can hyper accelerate your Traide Ringer account from your business income if you so desire. You could take some of your business income and do some special things for your partner for supporting you. Hey partner, I know it's been a rough week. I spent a lot of time in Zoom sessions this week and I didn't get to spend as much time with you as normal. Let's go someplace nice Friday night. Nope, make it Saturday. There's a Zoom session Friday night. Right? Do that nice little trip. Super accelerate your Traide Ringer account along with Compass profits. Past results don't guarantee future performance. Be a friend, supporter, contributor to your team's groups and economy. Don't sit there and just be a sponge. Don't be the silent type. I know we have introverts and extroverts, different personalities. But man, the support I see going on in those groups is just phenomenal. So I would suggest you go through these past 2 screens. These are the things that, These are the things that occupy that middle list that used to show just this panel of Traide Ringer settings. So now we've corrected it. It's no longer just, hey trader, master the settings and you're going to make money. It's, hey trader, we've got this full list of things you should be doing before you trade live, and most of these before you even trade demo. So I marketed this just a little bit as a game changer. First of all, don't see Traide Ringer as trading. See it as you have this incredible vehicle, long-term compounding wealth building vehicle. Its risks are inverted from manual trading. This is why manual traders who haven't yet succeeded come to Traide Ringer, and they're just going to destroy themselves. I mean, they are going to get chewed up and spit out for breakfast. Seasoned traders, different story. Seasoned traders being defined as already consistently making a positive return month in, month out. See, the big thing here is the head game. If you go back and to seed, if you go back, the head game triad, RIS, ego, law of attraction. If you master that, you'll be doing pretty good. Review this. I know it's been almost an hour and 45 minutes. This is real powerful stuff. We've reframed Traide Ringer. You now know that box that was just settings panel, and master that and you'll be making profits, was only part of the story. And the learn the settings, master the settings was one of, I don't even know how many things are there, 27, items on that list. To make it easier for you, next week I will have a PDF and there will be descriptions and all this stuff. So, yay! If you took crappy notes or you're trying to keep up and you couldn't do it, there'll be a PDF to the rescue. Next week, we're going to go over that pre-trading of Traide Ringer planning worksheet. Should say pre-use, right? We're going to go over that planning sheet. That is your strategic plans to remove all the emotions and see if you struggle with that planning sheet. Some people are going to do that. Some people are going to say, Steve, this is brilliant, except I don't know what to put here. Well, that's a good sign you shouldn't be trading Traide Ringer Live yet. See, if you're already trading Traide Ringer Live and you find yourself not able to answer that worksheet because you don't know what to put in certain places, it says you don't have answers, and therefore you're going to allow yourself to make emotional decisions when you get to those thresholds or those parameters. And what do we know about emotions? They're not your favorite trading partner. Ego and emotion are the worst trading partners you can have. And what happens, emotion? Deer in headlights. Why? RAS. What happens? Emotion. Amygdala gets flooded with enzymes and neurotransmitters, shuts down the RAS's ability to send information to the brain to be processed, and you have brain fog and are stuck. I just finished texting back to Amy. She asked me how I was doing out of consideration for knowing I was probably pissed off at what happened in trying to do the live event tonight when somebody assumed control or partial control of our screen, my screen. And I told her. I said, it wasn't something I was counting on, and it pissed me off, and because it pissed me off, I was like a deer in headlights, which I was. And all you are out there are saying, oh, all you have to do is this, all you have to do is that. That's nice, armchair quarterbacks. But when the amygdala kicks in because you have high emotion, I was angered, I was disappointed, I put a lot of time and effort into this, rehearsing, getting the outline whittled down the last 2 weeks, getting it to where I wanted it to say what I wanted it to say in an hour, and it's taken an hour and 48 minutes. And so I was upset. I was pissed off. And guess what? That's emotion. And so I was paralyzed to know what to do. Guys, we can't avoid it. We're human. And we have the same physiology, the same anatomy in our heads because we're human. And if you don't understand that, you don't want to take the time to learn it, the last thing you want to do is have money on the line and be deer in headlights. Okay? So we'll go over that planning worksheet next week, and then it'll be up to you whether you want to use this stuff or not. I'll make you a bet. The people that use it will be here 6 months from now. The people that don't, vast majority of them will be gone. Not my wish, just observation from the past. I know the past doesn't dictate the future, but when it comes to human behavior, it is very predictable. I'm going to challenge you to do the emotional part before you land in the heat of the moment. That's what that worksheet's for. We can compare and discuss these at the team level. hey, what about this? What does this really mean? Let me make sure I'm thinking about everything, that there's no hidden agenda here, that I'm not missing anything. See, these are great. Take a screenshot of it, post it. Let's have some conversation. These would be great things. Amy and I can do a couple software management sessions in the subsequent weeks, although next week we'll do the second part and go over that sheet. The following week we'll be in Miami, and then maybe when we come back we can do that. But we can have live sessions just reviewing those planning sheets before you use Traide Ringer. So next week we'll also review the current settings, the multipliers calculator, and just making sure you fit that into your plan. I'm thinking of having a guest panel for questions and answers, and we'll wrap this up and probably be able to get that done. So first of all, again, apologies for those of you who showed up live tonight. I always love people that come live. They get more out of it than watching the recording. And they've carved it as an important part. Sometimes when people say, oh, I'll watch the recording, it just never gets watched. Too many other priorities creep in every day. The recording's always there, so everything else is more important because you can always catch up later. Next thing you know, here we are, part 2, and you haven't watched part 1. So for those that showed up live, getting up, saw Becca there rubbing the sand out of her eyes as she was waking up to watch the session. Some of you stayed up late. Some of you left work early. I'm deeply sorry that we had to cancel it, and as we got started due to the cowardness and rudeness and lack of professionalism on somebody's part. And but this was cleaner. They couldn't interrupt this. Got it done. And I'm going to close out here as I always do, reminding you that life can be short and sometimes even shorter than that. So for the people you care and love, let them know you care and love them. I care about you guys tremendously. Amy and I love every single one of you. We're here to help you change the world one person at a time. So I look forward to presenting part 2. See you in the chats, groups, and channels. You all have a great weekend. Love you.